And good afternoon. Welcome into a Monday, January 4th, 2021 edition of Market Talk. Happy New Year and great to be here. I'm your host, Jesse Allen, markettalkag.com. That is where you can find us, our home on the web, markettalkag.com. You can also find us Facebook, Twitter, Instagram, all via at Market Talk Ag, our great radio affiliates as well, including WIBW in Topeka, Kansas, KGNC in Amarillo, Texas, also KASM in Albany, Minnesota, and so many more. Find the full list of our web affiliates online on our website also. Well, it's the start of a new trading year, and the first day of that yielded us fairly mixed results. Let's bring in our good friend Bryan Doherty with Total Farm Marketing by Stewart-Peterson. Bryan, Happy New Year. Good to see you and good to hear from you, my friend.
Yeah, thank you. I kind of was smiling there because mixed results. How about just crazy volatility today?
Yeah.
Wow, what a wild run in all of the markets.
Mhm.
Livestock, cattle, boy, what a rough session there. And grains, this overnight trade exploded. Equities exploded, and everything reversed down. Dollar was down hard, came back. But by day's end, boy, you could yawn at the corn market.
Mhm.
Quarter-cent low in the front month, couple higher maybe in July. So little bit there, but again, just a really strong undercurrent in the market and tone. And we got off to such a strong start to the new year. I think there's a lot of short covering and maybe concern this thing was going to run away, and it kind of
Mhm.
ran out of gas. And I think the traders were looking at some pretty nice gains for the day and probably just took them. And we think farmer selling's picking up into the new year as well, and that only makes sense.
Yeah, and we kind of wondered, and I think we should start there. We kind of wondered about farmers selling here once we turn that calendar over. A lot of folks maybe end of the year tax positioning, they didn't want to move anything on the calendar in 2020, but now we're in 21. Maybe they're saying, okay, now it's time to take advantage of some of this rally we've seen in the grain markets. Is that maybe some of your thoughts? Can you talk a little bit about that?
Yeah, we actually probably saw it toward the end of last week when we had 14 days in a row or 15 days in a row up in March corn, and
Hmm.
as we were talking to producers late in the week, of course it's a holiday week, but we were hearing them say, "Hey, I sold 20,000 bushels today or 10,000." So I think we're starting to get some corn into that pipeline, and I think these higher prices are, what a great year for corn producers if they manage to hold on to corn, which a lot did because they sold beans early. And I think the catalyst was trying to hang on to the corn for a bit because it looked friendly. You've got dry weather in Argentina as your driver there. um, but as you and I talked, and I've been kind of on this mindset for a long time that last year's crop I just don't think measured up, and it
Hmm.
finally showed up along with other things all in that August, September, October window and set the stage for a bull run like we haven't seen in a long time, with beans being the leader. But boy, wheat, corn, all of these really end of fourth quarter really came to life.
Yeah. And looking at everything here as we move into this new year, Brian, obviously, like we said, a lot of volatility today. That overnight session exploded higher, and then we just kind of yawn at where things ended up today. But we got that January WASD report right around the corner. We got some other factors out there in the marketplace. But just judging on where this market is starting the year and this impressive run that we've seen, what are your thoughts here for this week? Do you think this is maybe a week where we're going to see a little bit more profit taking and maybe continue to reverse down, or do you think maybe we're going to hold here? I know it's hard to say, but are you seeing anything in the market in the trends in the chart right now?
Yeah, well, the trends in the charts are up. So let's just start with that. And we've
Hmm.
seen fund money come into the marketplace. It's strongly entrenched on the long side. That looks impressive. So we've got, I think if we step back and kind of look at the bigger picture, I talked about last year's crop. So that's a supply issue, but really this has been a demand driven market here. Maybe more so than supply. The tightening supply numbers have helped to accentuate the demand, but the USDA has penciled in strong export sales. Inspections are running solid year to date. Corn export inspections up 73% from a year ago. If I
Hmm.
did the math right here, soybeans up 77% again today, 35.9 in corn, 48 in beans. So we're shipping the stuff, that the stuff's making its way out. It's creating good basis levels. So I think you've got a demand driven market with a backdrop of tightening supply, and then throw onto that the caveat of some uncertain weather in the southern hemisphere when it comes to the production side of it. And again, is that is that leading to more demand, or is it leading to tighter supply, or probably a combination of both? It also leads to another demand driver in the market, is that that's a demand to make money by the speculator. Get on
Mhm.
trends, go with trends. The trend in corn is up, the perception is higher. When you look at $13 beans, to see a $5 mark in front of corn certainly seems reasonable from a percentage perspective, and we got really close to that today with a high of 497 and three quarters in March corn.
Yeah, and it's really just been an impressive run up here. I mean that that high 497. That's a number that I don't think any of us thought we were going to see in corn. This time last year.
Well, I don't think anyone was expecting we'd see that even 3 months ago or 2 months
Yeah.
ago, for that matter. It's been an amazing run, but that's how these things happen.
Hmm.
You get this long-term trough of low prices, and as you know, I've said this a million times. I do think ultimately low prices cure low prices. You create demand markets. These things don't happen overnight. They take a long time to develop, grow demand. The guy that's trying to decide whether do I retain my heifers or do I move them? Well, corn's cheap. Maybe I'll keep them around, and those are the kind of things that build
Hmm.
long-term demand, and eventually that catches up to the marketplace if there's some kind of supply disruption, maybe, or perceived demand, or both. And you got them all this year. You got trade deals, you got big demand, you got exports, you got a weaker dollar, you got all of these variables that have really helped to accentuate this rally into something we haven't seen in 7 years now.
Well, Brian, I want to ask you as well. Argentina coming out saying they're going to suspend, corn exports till March 1st. I think a lot of folks are wondering: is that going to increase demand for U.S. corn from its current level, or is the market just going to kind of digest that and move along? What are your thoughts about that?
Well, great question. First of all, what it tells us is that Argentina is acknowledging, hey, we've got a tighter inventory, and we maybe have some weather issues that are going to tighten the supply.
Hmm.
And consequently, when you have those variables, you get stuck with something that indicates, hey, do we need to hold back our inventory for a lot of reasons? So somebody needs to fill that void. And there aren't a lot of somebodies out there to fill the void. And the U.S., I'm not sure where they are today, but into last week was the cheapest corn in theory, I guess, or in reality on the world market.
Hmm.
So, so it's a timing thing. That's just another 2 months of export activity that could come toward the U.S., solidifying, despite higher prices, the same amount demanded or more than we're seeing on a weekly basis, let's say 2 weeks ago, or 3 weeks ago, or 4 weeks ago.
And looking at that as well, I know wheat futures were a little bit mixed on the day today, but one has to wonder, and I'll ask this question as well. I mean, demand for U.S. wheat, is that going to become more of a market factor here as we move forward the next couple of weeks? What are your thoughts?
Well, it certainly could. The thing with wheat is that it's produced in every major country in the world, and it's
Hmm.
basically produced around the whole year. So it's a little finicky. In the U.S., traditionally, let's say, markets about 10% of the world crop of wheat. And
Hmm.
so if we're only marketing about 10%, are we going to pick up extra? We sure can. We sure can pick up some extra share. The COVID spike, this is a whole new beast. Nobody knows really how to necessarily fit that void of well, okay, is our foreign countries going to hold back? Is Russia going to hold back for security reasons at home? Is Eastern Europe? You throw some drought in there. I don't think the world's ready to run out of wheat, though, but you have a very impressive upturn in the wheat market, and a lot of fun money there, again, coming back in and buying wheat, buying a commodity, buying a row crop. So they kind of move in tandem when you've got that investment dollars pushing into the whole spectrum of row crops.
Well, I know we've been talking a little bit in generalities here just as we get into 2021, Brian. Another factor in this marketplace I think we need to touch on is the dollar. The US dollar weaker, 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 it seems by the day. How much is that weaker dollar playing into this grain market? And do you see, any sign of this dollar strengthening or slowing down in its weakness anytime soon?
Eh, I'm not an expert on the dollar, but there's been talk for a long time that the dollar would soften, and it has, and it
Mhm.
continues to soften. And when you talk about things that can drive the dollar, interest rates, do we have an inverse relationship there? Looks like interest rates probably stay on the lower side right now. Dollar gets weaker. I don't. Today, I guess I don't see anything that suggests a turnaround. The dollar's been on a downslide here for several months, but it's still relatively high compared to where it was maybe several years ago. So there's more room for that to work lower if it wanted to. I guess what I don't see right now is we're just kind of in a strange window, um, where we've got the stock market again busting into new highs. Today made a reversal, so we need to maybe recognize that that might be giving us a topping signal the first day of
Mhm.
the year. Um, you got a new political party, you've got this, you've got that. The dollar, though, it looks like the general idea has been to pressure the dollar, create a more friendly environment for U.S. exports, whether it be agriculture, manufacturing, what have you. And I don't believe there's any real emphasis to turn that at this point.
Well, overall in grains here, Brian, before we move to livestock on this first day of a new trading year, again, we ended up with all the volatility, we ended up fairly quiet on the day. Was there anything else major in grains that you think we need to keep an eye on as we head through the rest of this week?
Well, good question. So this today's the fourth. A week from tomorrow, we'll get the next USDA report. So the rest of this week, the market might sort of jockey for position on the report. Um, we'll see. I think the continuation of watching the southern hemisphere weather is big
Mhm.
and important. That'll probably be your driving force. Two, let's kind of watch the money flow at the end of each day to see if the funds actually added or took taken away from positions. And that ebbs and flows as well. We'll see what the export sales numbers are on Thursday. On today, we have export inspections, and those again were solid, telling us we're moving the product. And then we'll get a better climate out there. We'll see this through some maybe of our basis analysis if farmers are really selling corn or the end users really jumping at it. And it looks
Mhm.
to me coming into the end of the year, farmers were, as I think I alluded to earlier, they were a little bit complacent in selling. They just, it's one of those time periods where all of a sudden they didn't have to be sellers, and I don't think a lot of them were.
Brian, let's switch over to livestock. And you mentioned at the open of the show, cattle. Whew, what a rough day in that cattle
Mhm.
market here. Not the way I think cattle producers wanted to start 2021, but just despite we saw a nice surge of pork values, but cattle just really faltered from the onset today. What did you see in this cattle market that caused us to turn such aggressively lower here on Monday?
I don't know. Sometimes you just got to call it as you see it, but I don't think I really saw anything in the cutout value that had me concerned. I We had a technical day. I think the bigger overriding concern is maybe holiday demand will turn out not to be as good as hoped for. And maybe that's what the market's telling us right now, that the Packers going to back away from this a little bit. Is it a COVID issue? Those type of concerns. But today is just one of those days where I'm going to say I wasn't really anticipating or expecting this kind of a session, even with all of our, kind of our livestock stats that we can keep a handle
Mhm.
on. Daily slaughter not overwhelming, cutout values not telling us much there. I'm kind of perplexed and lost why the board, and sometimes that happens where the board just takes a dive. But so you look at the cutout values open this morning, $2.67 higher in choice at 212. That doesn't warrant a 200 point down or limit down close to the limit on the futures contracts.
Mhm.
Choice up as well. You look at the select choice spread around 16, 15, $16. That told me we're fairly current in the feedlots. Had some winter storms here recently, less than ideal conditions. I'm a little bit perplexed. So it may have been just more of a technical day, or traders saying, "Hey, we want to own hogs right now and sell cattle," and it may be that simple today.
Well,
It
and we
did.
think about.
Yeah,
Oh,
I'm
go
sorry. The
ahead.
last thing I was going to say, what did happen though, is when you look at almost any of the live cattle or feeder cattle charts, we moved through some moving averages today that have been kind of well respected. And my hunch there is we saw a lot of stops uncovered that That's selling that, a trader may not want to be selling today for fundamental reason or thinking, but his orders there gets triggered, kicks him out, and adds downward pressure.
And that's a great point that you put there at the end. And I think overall, we've been just trading this range in cattle for months, and we've been kind of moving along, and really, we've seen some strength here. And like you said, maybe this is just a little bit of a correction today. Maybe it's who knows? That could be a number of things, and we could look at this market tomorrow and come back and add what we lost today back in. That's just the way it's been lately. But definitely, this cattle market to me today was kind of I'm with you, a little bit of a shocker, a little bit of a head scratcher, and maybe something, maybe a opportunity for producers to pause a little bit and just take a look and see what's going on with their cattle herds.
Well, I think it goes back to two we talked about last week when the market was, it's been trending higher for a few weeks, and
Hmm.
yet even with today, I mean, today's not a good looking day, and unlike the April contract down $3, but when you look at where it is today, it's where it was 2 weeks ago, and the 2 weeks prior, and 2 weeks prior, you've got this beautiful inverted head and shoulders formation. So if you told me nothing different prior to today, and you said, hey, we'd see cattle a $3 move, all the arrows pointing to higher on that chart formation because that's an inverted head and shoulders. So maybe today's a 1 day down. I don't know. I just feel somewhere I either don't have enough information yet today, or we're missing
Hmm.
the 8 ball on why the market decided to take a spill today, unless it was just after the morning hours, just lighten the load on everything agriculture moving into the new year, with the exception, for some reason, of hogs, which have had a good run here, which a little bit of a head scratcher there too, because it's not like we're running out of hogs anytime soon. I've been making the argument that summer months, if they get rally to them, you should defend, because
Hmm.
I think that the purchases from China eventually slow down as they continue to build their hog herd.
And you led me right to my next question. It was kind of the opposite in hogs, like scratching our head here a little bit. This hog market just seemed to have some great, impressive support here today, and I think you hit on a couple of those main points there. But hogs, another couple of good days like this, and we could be talking about some producers wanting to maybe move some hogs just because we're breaking out of that range that we've been in, Brian.
Yeah, and certainly maybe looking at getting some hedges in place on the summer months there too. They've had a good recovery here, and it may be as simple that today was more sort of a reflection of traders reversing,
Hmm.
the idea of, being short hog, where hogs starting to show some strength and get some short covering there, and get some long liquidation in the cattle market. So I think the jury is out for a little bit here, but yeah, the hog market just to me is impressive right now, and I don't want to act like almost $84 is some kind of all time high in hog prices, but on
Hmm.
October 14th, the high was 83.80, and today's high was 84.05. So we hit our highest price this calendar year. You got to go. Well, it's obviously January 1st, but you got to go back to last on that particular contract last January when the market peaked,
Hmm.
and we're right at those same levels. So we're looking at a 13-month high in those summer months. It's fantastic.
Yeah, it's great. And who knows? Maybe traders just got confused and decided to trade hogs today instead of cattle. It's hard to say. Brian, dairy. Any updates on the dairy market here, real quick?
It's been a volatile fourth quarter and a volatile window, and we just don't really. When I say we, I'm going to start with me, and I think the analysts as a whole really don't see a theme where we're producing less milk right now. The reports have all indicated we're producing more. Um, Yet I'm going to argue that the market, it was off a little bit today, but the back
Hmm.
months, or let's start with March, April, May, all the way through the year, they've all got a 17 in front of them.
Hmm.
That's that's pretty solid price right now. Now your producer is going to say, well, look, we've had $20 milk, but we got negative PPDs, producer price differentials, where the cash market just isn't that strong. So that's where there might be some hesitancy to take some defensive posturing. But when I look at this, I could go all the way out through the year, and you could average something over $17 for at least a quarter of your milk for the year.
Hmm.
What a great approach to maybe get a quarter booked, and if we do make an advance, get another quarter booked somewhere along the line, and averaging up, you'd probably be in pretty good shape there. The other thing the dairy producer probably needs to, really pay attention to is the grain markets. That's probably what's holding milk up some too, is just this idea of high price grain, high price meal, high price anything protein right now. But I don't know if that's enough to say, okay, we're going to slim the herd down. Most farmers in the Midwest had pretty good hay this year, and they had pretty good corn in production. So I don't think most are looking at trying to source inventory.
Hmm. Well, a lot of great insights today, as always, Brian. I know we covered quite a bit here for the first trading day of a brand new year. If producers want to reach out to you and get a little advice with their marketing plans, whatever commodity or livestock they're trading, what's the best way to do that?
I'd ask them to just give me a call at 800-334-9779.
That makes it easy.
Yep.
Makes it very, very easy. Brian, I appreciate the time as always. It's great to catch up with you, and we'll talk to you next week.
Thank you, Jesse, and good luck to you and everybody in 2021.
Bryan Doherty, Senior Market Analyst with Total Farm Marketing by Stewart-Peterson, our guest today here on Market Talk. This has been the Monday, January 4th, 2021 edition of Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.